Friends, welcome to our today's session on tax planning and management. You might be having some basic idea about tax planning. When you talk about tax planning, what comes to your mind? Is it about reduction of tax or something different?
Yes, sir. Redemption tax saving.
Yeah,
How to reduce the tax
how to
to be
reduce
paid.
tax, how to save our tax, that is one thing. But it's not necessary that always tax planning means reduction of tax. Sometimes it might be deferment of tax can also be referred to as tax planning. If we are not reducing, for some reason we are unable to reduce it, but we can at least defer it. If tax which is payable right now, we can defer it for 3 years, 4 years. Then also that's also a good tax plan. Okay, tax planning involves many things like that. So we'll be learning that thing. Okay, how that is linked to the subject management, that also we'll be understanding. But now, before learning anything, let us say, can you just think of how to reduce the tax burden? Tax is paid on what? Tax is paid on income, is it not? If you are talking the income tax, if we'll be talking about income tax, tax is paid on income. Okay, and in businesses, income is very closely related to the profit. Is it not? Yes or no? So when I say you have to
Yes, sir.
reduce, when you have to
Yes.
say you have to reduce tax, then directly if you say if you can reduce the income, then tax will be reduced. But would you like to do that? Would you like to do that?
No, sir.
No, you don't want to
No,
reduce
sir.
income. Okay, I'm showing you now. Was this whiteboard? I'm showing you something. Let us say this is my PL statement. Okay, profit and loss statement. Okay, here I am writing all my incomes, sales, etc. I am writing here. Let us say I am writing it is 5 lakh. Are you able to see it? And this side I am writing all my expenses. Maybe purchase, maybe wages, salary, rent, all taken together. Let us say 4 lakh. Okay, and total this side it has to be 5 lakh. This has to be 5. This is 5 lakh. This has to be 5 lakh. The difference is what? My income, or you can say my sales. I will not call it as income. Let us say my sales is 5 lakh. My expenses are 4 lakh. Then difference is what?
1 lakh.
1 lakh is what? What I call that? What I should call it? Difference is 1 lakh. What is this?
Profit.
This is your profit. It's profit. Okay. The profit is very close to our income. We'll understand what is profit, what is taxable income. That's different thing. So we'll be paying tax on what? We'll be paying tax on 1 lakh or 5 lakh or 4 lakh. On what amount we are going to pay tax?
1 lakh.
On 1 lakh.
On profit we have to pay tax. Now let us say we'll imagine a situation. Let us say it's a kind of company where tax rate is 30%. How much tax you have to pay?
30,000.
30,000 tax you have to pay. Right? So tax rate is 30% means you have to pay 30,000. 30,000 tax you have to pay. Okay. Now you want to reduce it. How can you reduce it? You can think of, if you reduce your sales, then naturally profit will be less. So instead of 5 lakh, you could make it 4 lakh 50,000. Then how much will you profit? 50,000. Is it not?
Yes, sir.
50,000 means you have to pay 30%. You will pay 15,000. So you are reducing tax by 15,000. But would you like to do that? Would you like to sales? Would you like to reduce your sales?
No, sir.
No, you don't want to do that. So you don't want to reduce tax at the cost of reduction of profit. You want profit should be there, but tax should be less. Is it not? You don't want to reduce your sales. Okay. No businessman wants to reduce its sales. Maybe there is a possibility some may think of hiding sales. Okay, that means what is the actual sales if you don't disclose? Let us say sales is 5 lakh, but let us say somebody wants to hide it. Somebody wants to show it only 4,50,000. Another 50,000 is not giving any bill or giving a kacha bill kind of thing. So he's able to hide it. Then by hiding that thing, he's reducing tax. Possible or not? If somebody hides sales, is it possible to reduce tax or not?
Possible, sir.
It's possible. It's possible, but that will not be called as tax planning. That is tax avoidance or tax evasion you are doing. That's different. We'll be understanding these concepts also. What is tax planning? What is tax evasion? What is tax avoidance? What is tax management? All these things are different concepts. Okay. So if someone is doing something in an illegal way, when you do something illegal way, there is every chance that uh, you can be caught. All your sales are linked to your GST return, so one can find it out how much actual sales and how much you are sold for tax purpose. So that is not an advisable thing. To reducing sales, reduction of sales is not advisable, and hiding sales is also not advisable. That is illegal tax avoidance or tax evasion. That is also not good. Other thing is that increasing these expenses. Would you like, if you increase these expenses, then profit will be less, tax will be less. Would you like to do that? Would you like to increase the expenses? Yes or no? Please respond quickly. Would you like to do that?
No, sir.
No, that also you don't want. You want to minimize your expenses. Or you may think that artificially you will increase your expenses. That means you will include some fake expenses. Actually, you are paying 4 lakh, but in the books of accounts, you book it as 4 lakh 50,000. Then also, profit will be less and you will be paying less tax. But that is again something illegal. Is it not? You are actually paying 4 lakh but booking at 4 lakh 50,000. That's also illegal. And whenever we are saying we are doing something illegal, we cannot call it as tax planning. Meaning, when we talk about tax planning, we have to think how to do it within the framework of law. Okay. The moment you are adopting some illegal means, that is not tax planning, that is something else. What is that? We will be learning subsequently. Got some idea? So tax planning is about reduction of tax. It is about deferment of tax, but within the framework of law. Are you getting me?
Yes, sir.
Okay. Right? So let us understand that. Now, when I say it is within the framework of law, we need to understand the law. Yes or no?
Yes, sir. Yes,
Only
sir.
when we know law, then only we'll be able to do tax planning. But not only law, there are many other things we need to know. What are those things? Law means act. Income tax act one needs to know. Not only acts, there are certain rules. Most importantly, income tax rules. Income tax rules 1962, that is also relevant. What are these rules? These rules are framed by Central Board of Direct Taxes. So to do proper tax planning, first of all, I need to know Income Tax Act 1961. That is one thing, right? Second thing is I need to know Income Tax Rules 1962. Third thing what I need to know is various notifications, circulars, clarifications which are issued by department from time to time. Income Tax Department issues these notifications. Right, we need to understand this notification, then only we'll be able to do tax planning. Is it clear? Fourth thing which
Yes,
is
sir.
relevant. Fourth thing which is relevant for us is also we need to understand various or need to have some idea about various tax laws. Tax laws means courts of our country, high courts, gives various decisions in tax cases. If you're having some idea about those cases, then we'll be able to apply those logic, or we like to incorporate those concepts when doing our tax planning. So knowledge of tax law and knowledge of cases are also important. That also we should know. Is it done? Plus, in addition to that, we need to have some fair idea about tax rates, and these rates are there in the Finance Act. That is in annual budget, tax rates are there. So you should have some idea about Finance Act. So if you know all these things, then only it will be possible to do proper tax planning. Okay. Okay.
Yes, sir.
Now
Yes,
question
sir.
comes, how to know that thing? How to know that thing? Some of you might have seen it earlier in my earlier sessions. Today, let me do one thing. I'll quickly take you to a virtual tour to the Income Tax Department's website. We'll see what is the content of that website, how these contents will be useful for our tax planning. That also we'll be learning now. Okay, so let us first visit to the department's website. We'll make a virtual tour, then we'll see. Okay, so I am taking you to the Income Tax Department website. Please wait for a moment. And please interact. Tell me what you are seeing on the screen right now. What you are seeing.
Google, sir.
And in this browsing page, I am typing. Please see what I am typing. What is this website? Can you tell me?
Incometaxindia.gov.in.
Yeah. So I am going there. Income Tax Department's website. Is it visible to you?
Yes, sir.
You see Income Tax Department's website. Why I am visiting here? Because here many things which are relevant for my tax plan. Here you see there is a heading, tax laws and rules. Okay. So if I want to do tax planning, I need to know these laws and rules. You see acts, rules, circulars, notification, budgets means that annual finance act. Okay. Bills and direct tax codes which are coming in future. So all these things are here. Okay. So if I want to understand a particular provision of Income Tax Act, I can refer here. If I want to refer to a particular rule, I can see here. If I want to see some circulars clarification, I can find it here. Understood? Where I can find? Okay.
Yes, sir.
Few other things. If I want to plan something in the area of international taxation, I need to understand various tax treaties. They are available here. Double taxation avoidance agreement, they are available here. I can see it. Okay. And there are some other services are available here. And for us, like for students, what is more relevant here, you see these tax tutorials. One can learn many things from this tax tutorial. You can visit at your free time. Tax tutorials you can visit. The tax rates, charts, etc. are available here. One can see. Okay. One can see tax tutorials. I am clicking here. I am just showing you. You see, if you want to understand what is permanent account number, okay, e-payment of direct taxes, many important things are there. What is minimum alternate tax, income from house property, you see. Various pages are there. You can visit to different pages and take a full tutorial. Okay. And tax charts tables are also relevant. You see, tax rates are there in this table. TDS rates. TDS means tax deducted at source rate. Various tables are there. If you want to refer to these tables, you can find it here. Tax rates. Okay. Then these tax tools are also familiar for us. Before learning, before explaining you this tax concept, I would like to familiarize you with all these things. Are you seeing these tax tools?
Yes, sir.
Here you see in various pages are there, pages 1, 2, 3, 4, like this, various pages are there, and these pages contains various tax calculators. I'm showing you one simple calculator. You see tax calculator, with the help of which you can also very quickly calculate your tax amount. You see, this is the tax calculator. I'm just showing you how to calculate tax of a particular person. Let us say for 21, 22, and our taxpayer is an individual. What is assessment year? We'll be learning that concept. Assessment year is a taxpayer. Whether you are opting for 115 BAC option, we'll write for the timing, we'll write it. No. So this is an additional provision for this assessment year. I'll be explaining what is that. But right now, just I wanted to familiarize you with the use of calculators. Whether the person is male, female, single citizen, anything you can choose. Residential status, let us assume person is resident. Now you type your income, let us say income is 15 lakh. So one can find out how much is tax payable, how much is education tax payable, how much is payable. So without knowing much about income tax also, one will be able to find out what is his tax liability. Understood it? Tax calculator.
Yes, sir.
Okay. So one can think of a simple tax planning. Let us say all these things are there. It is tax liability is this one. Suppose one opts for section 115 BAC, what is the tax liability? One can also calculate. Then that is also tax planning, whether you should opt for this section or not to opt for this one. So here you see 2,73,000 is the liability. If I write here yes, what is the liability? 1,95,000. So now you see very simple tax planning that one should opt for 115 BAC. What is that 115 BAC? One has to ignore certain deductions, and you have to pay tax at a concessional rate. We'll be learning that thing. So is it helping for our tax planning or not?
Yes, sir.
Okay, one can easily plan tax. For example, another thing I am also showing another example. For example, let us say someone is having income of 5 lakh rupees. You see tax amount is nil,
Zero.
is it not? But let us say someone is having 5 lakh and 100
Yes, sir.
rupees. Sorry, 5 lakh and 100 rupees. I told tax amount is 13,000 something. So in this case, one may think that let me defer that 100 rupees to a different year. Because if this year I am receiving this 500 rupees extra, my tax liability is becoming 13,000. Is it helping tax planning or not?
Yes, sir.
Okay. So right now you see, friends, we do not know much about income tax law. We have not entered into that right now. But using these tools, we'll be able to do some type of tax planning. Now let us see how to make use of law to do the tax planning. Okay, understood. I request all of you to visit to this website and familiarize yourself with various calculators, various tools which are available in this website. And you can read these tutorials which are which you feel interesting for you. You can read, go through some of these tutorials. You can go through the tax charts, okay, and this arcs, etc. You can refer to. Anyway, I'll be referring to ARC many places. Now let me show you how to read the Income Tax Act. Now you see, I'm clicking here. Okay. Now if I go to ARC, what is here written on the top?
1961 Income Tax Act.
Yeah, Income Tax Act 1961. If you click here, you can find out the entire Income Tax Act. Okay. Act you can see, you see here it is, this button is on, radio button. This is called section wise. Therefore, you are seeing section 1, section 2, section 3. In section wise, you are seeing the Income Tax Act. Okay. Various sections. So next page, you can visit to next page, you can find out this is a section wise arrangement of Income Tax Act. Okay. Are you seeing it section wise
Yes,
arrangement?
sir.
So at any point of time, if you want to refer to a particular section, you see you can type the section number here. You can see a particular section. Straight away you can go to a particular section. So if you know you are looking for a deduction, what is the deduction under section 80C? You can find out 80C. Enter 80C section will be open for you. You see 80C is here. You can link it. You can find out section 80C. You can read. Okay. If you want, you can note it also. You can just select it and copy it and paste it in a Word file. You can make a note of it. Okay, you can copy and make it file. You can read it. This is how you can refer to a particular section under income tax act. Understood? Okay.
Yes, sir.
Now you can do one more thing. Instead of section wise, you can go chapter wise also. You see, you can click here. You can visit chapter wise. You can find out. You see, these are various chapters. Okay, other pages are also there. Preliminary basis of charges. You can go to a particular chapter and find out something what you want. So you can say entire book of income tax is here, and these things will be helping us to do the tax planning. Okay,
Yes, sir.
right. Now we'll again come back to this side after some time. In the meantime, let me introduce you to the topic of tax. First, let us understand topic of income tax. After having some basic idea, only we'll be able to do some kind of tax planning. I will be sharing PPT with you right now. Yeah, are you seeing it?
Yes, sir.
Yes.
Yeah. So if you look at your syllabus, it contains these 5 units, right? Just have a look.
Yes, sir.
And the first unit, we are supposed to learn about tax planning concept. So I'll be covering you that part, tax planning concept. Then tax planning for different organizations. Then the concept of capital and revenue. What is income? What is receipt and what is expenditure? Computation of income for corporate form of organization. Then deductions and reliefs, rebates, exemptions, and recent developments of tax law. All these things we are going to learn in our first unit. Okay, but before entering to this first unit, the tax planning concept, we need to first of all understand the concept of tax. Let me explain you the scheme of taxation first today. We don't have much time today, but still we'll introduce you to this topic. If you want, you can note down. Otherwise, just read with me. Can you read what I'm showing you? Can anyone read it out?
Every person
Then every person.
whose total income of the previous year exceeds the maximum amount which is chargeable to income tax.
Is not chargeable to income tax.
Not chargeable, not chargeable.
Yeah.
Is an SSC and chargeable to income tax at the rate or rates prescribed in the Finance Act for the relevant assessment year.
Yes. We need to understand this. Let me repeat. Every person whose total income of the previous year exceeds the maximum amount which is not chargeable to income tax is an assessee and chargeable to income tax at the rate or rates prescribed in the Finance Act for the relevant assessment year. Friends, to understand this particular scheme, first of all, we need to understand the meaning of all these words which are appearing in red color. Okay, we need to understand what is the meaning of person. Okay, because every person is liable to tax. So we need to understand who is a person. Okay, is there any possibility to plan that and plan the entity in such a way that you will not become a person? If you are not a person, then you are outside the scheme. Okay, we'll be understanding what is the meaning of person. Then we'll be understanding what is the meaning of total income. Okay, so if we can plan our income in such a way that it is not coming within the definition of total income, then we are not going to pay tax on this. Next concept is that total income of the previous year is relevant. So we need to know what is previous year. We also need to know what is the maximum amount which is not chargeable to income tax. As I had shown you, 5 lakh rupees I had shown, tax was 0. That means there is a maximum limit. If you earn up to that, tax will not be payable by you. Okay, we have already seen it in tax calculators. You can try it at home. Put different figures, you can see when your tax liability starts for different kind of persons. So we need to know what is the maximum amount which is not chargeable to income tax, and that person will be called as an assessee. And once someone is an assessee, he is chargeable to income tax at the rate or rates which are prescribed in the Finance Act. So we need to learn what is the rate and rates which are prescribed in the Finance Act, because tax will be levied at that rate. We can also think if you can change the rate by doing something. And the Finance Act of the relevant assessment year is relevant because every year you get a new Finance Act. Which Finance Act is relevant, we also should know. So we need to know what is the assessment year, what is Finance Act, what is rate and rates, what is chargeability, who is an assessee, what is the maximum amount not chargeable, what is the previous year, what is the total income, what is the meaning of person. We need to understand the meaning of all these things. Okay, is it clear to you?
Yes, sir.
Okay,
Yes, sir.
right. Now, friends, here few other things also you have to remember at this stage. I told you the total income is liable to tax, and here we have to keep one more thing in mind: the total income will be computed on the basis of your residential status. That means total income is linked to residential status. So one has to find out what is the concept of residential status. One person can be a resident, can be a non-resident. He can also be a resident but not ordinarily resident. So on that basis, total income will vary. So one should have some idea about the residential status. One can plan the residential status in such a way that tax liability will be minimum. Okay, because certain incomes are not taxable to non-resident. So if you can convert somewhere a resident can be converted in non-resident, then there might be some income which not be included in total income. Okay, so that can also be regarded as a good tax plan. By changing the residential status, you will be able to reduce your tax liability. Okay, then one more thing. This rate or rates at which tax is to be levied are most of the rates are there in the Finance Act itself. Finance Act means not in the Income Tax Act. Finance Act means the annual budget. You find the rates of income tax. But there are few rates which are called as the special rates, which are there in the Income Tax Act itself. Like 30% will be levied on tax on lotteries. Okay, or long-term capital gain in some situations 20%. So like this, there are few rates which are there in the Income Tax Act itself. So rates are prescribed in the Income Tax Act as well as in the Finance. Okay, and who is an assessee? Obviously, if tax liability is there, that person is assessee. But that is not the only thing. Even if tax liability is there, not there, some person can also be referred to as an assessee. The exact definition of assessee is provided in Section 2, Clause 7. We'll be understanding that. So this gives you a broad idea about the scheme of taxes and how tax will be levied. But it will not be clear to you unless we read these terms, unless we understand these terms. Is it clear up to this about scheme of taxes?
Yes.
Okay. Any query if you are having, ask me right now. After that, I'll be starting explaining you these terms. Okay. Now I'll be explaining these terms. These terms, let us say, first of all, we want to understand the term person. The term person is defined. Wait a minute. So first, as I told you, every person whose total income exceeds the maximum amount which is not chargeable to tax is an assessee. And in that case, he will be chargeable to income tax at the rates which is prescribed in the Finance Act for the relevant assessment year. That concept just now we have got. But friends, first of all, what we will do, we need to understand the meaning of person. The meaning of person is defined in section 2, clause 31. But before going to section 31, I would like to explain you section 1 of the Income Tax Act so that we can understand the scope and applicability of the Income Tax Act. Then we'll go to section 2. Okay, today time may not permit us. Quickly, I will be just showing you Income Tax Act section 1. Again, I am taking you to this department's website. Just have a look. Okay, I'm going here section wise. I'm going to show you section 1. Now you see, this is how Income Tax Act looks like. This is how section 1 looks like. This is under first chapter. First chapter is called as the preliminary. Okay. So Act starts from here, section 1, subsection 1, 2, 3, 3 parts are there. If you read it, subsection 1 talks about this act shall be called as Income Tax Act 1961. This is the title of the act. So Income Tax Act's name is Income Tax Act 1961. This is the full name. It extends to whole of India. So this talks about applicability, extent of application. Then third provision says it shall come into force on first day of April 1962. What we are learning here, it will applicable with effect from 1st April 1962. These are the 3 things which are provided in section 1. Once section 1 is over, we will be going to section 2. Section 1 talks about short title, extent and commencement. 3 things. Okay. Name is Income Tax Act 1961. Applicable to whole of India. And it will applicable from 1st April 1962. Friends, today we'll stop here. Next class, we'll be entering into section 2, where the meaning of this, most of these terms are there. We'll be learning that thing. Okay. But today, you please do one thing. You may visit